Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description.
Now, this is very interesting. We've been talking about how this right tail always gets ignored when everybody's focusing on the left tail. And here we are. I feel like a broken record everywhere I go. I'm talking about this melt up and right tail stuff. At this point, it may not even be done. I don't know what's going to get us going again, but you can see this. Basically, this is showing positioning. So people are selling market makers a whole bunch of puts, right? So the market makers, when they load up on puts or calls, in this case, it's puts below where we are, around where we are. If they keep buying those puts, then that creates stability in market, right? Because they buy future stock against puts. And so there's this positive cradle of gamma that we talk about sometimes. And if you look to the upside, people have missed, because of all the things that we've shown weeks ago, which basically nobody was playing the upside, just super cheap upside calls. Now they've reconsidered, they're trying to buy convexity. So what a lot of people are actually doing is they're coming in and going, you know what, there's the overall option pricing is cheap. So what can we do? Well, we can do stock replacement, right? So instead of owning NVIDIA, well, I can get rid of my NVIDIA and I can put on a position with calls because they're cheap. Maybe I can go higher delta to make sure I'm getting enough of a move to the upside when things go up. And so you've got this sort of negative gamma to the upside. So I hate to say it, bears, but if for some reason we start rolling hard to the upside, you're going to have this negative melt up potential out there, the melt up into the meltdown at some point. But we don't know how long this melt up's going to be. You're saying end of June, Samantha. Maybe it goes a little longer. We got our caller.
I can only show you what I have, and it's worked, and I have to be just on it. But because I'm also getting a question about liquidity,
Okay.
Show the rest of your chart, and then I'll show mine.
Oh, yeah. So here, this is just another way to show that skew, right? This is where everything was, end of the world, let's pile into puts. And now everything's rejigging a little bit, normalizing, right? Normalizing because people missed the upside. So this is basically showing that now it's coming back into a little bit more balance of calls coming up and puts coming down a little bit as they keep hammering those downside puts. So that's the backdrop from a flows perspective, from a gamma perspective. Oh, where was that little chart? Oh, I don't even have it on here. Oh, that's too bad. I had a chart of the ETFs. So this is the levered A growth. You mentioned it at the beginning, at the top of the show. And if we look at, this is where those levered ETMs, so we've explained the math behind this. And of course, as MAG, especially because that's where a lot of these leverage products exist. That's where they live in MAG a lot, at least half of it or 2/3 of it. So in those names, when they have good runs, it creates more of a good run. Buying begets buying, just like selling begets selling on the way down. And so here we saw A really get crushed into the sell-off, and it's back on again. People are back on the train again. A in these products, zooming up. I was looking at SOXL the other day. It was interesting, Samantha. I looked at, because I was doing like I have a little kind of crazy theory that it's not crazy. Those things will do well when there's not as much underlying movement. So once you hit a good trend, it can really go. We talked about that last time. There is as much A, last I checked, in SOXL as there is in the SOXX, which the SOXL is based on. There's the same amount of A. So you can bet people don't just want to go fast, they want to go as fast as they can in these kind of sectors. And I think that's always fascinating. Okay, back to you.
All right, where to start? Let's just do this one. So you can see this VIX, it's on a weekly. You were just talking about when does it get interesting again? Okay, so this is my own proprietary thing, right? So I have on a weekly, you can see where it does not trigger very often. So down below these dates, I have an indicator, long story short. And when it triggers, it just means pay attention. That's all it means. It means pay attention. It could get bumpy, okay? Now I've got it on a weekly. Why? Because we don't get so much volatility. And always I'm looking for policy interference or policy intervention as a reason for the season of macro backdrop to support bullish flows. And then I'm looking always for a macro event risk to interrupt the bullish option flows. So that's always how my kind of guardrails work as far as when to stay in the trend and when to be careful that the trend is going to change. And I've been saying since April 22nd, in fact, when gold topped and VIX came back inside 29.56, I said, this is where I see VIX falling, that realized volatility, falling into options expiration on the monthly. And then I did it again for May, and then I did it again for June, meaning we're going to keep going lower in VIX, which is naturally supportive of markets, right, into June. I think June, end of June is probably it, because my indicator is not green yet, right? It hasn't triggered, but I see that it's going to trigger in this neck of the woods, which basically is July, middle of July, maybe into beginning of August. It's also not a game of perfect, but it's absolutely when I start to pay attention. So long story short, this is my indicator has not triggered yet, and why I keep saying I see it triggering in July and August. What will it be? Will it be tariffs? Will it be the debt ceiling not getting raised, like Besant was out today saying, by the way, if we don't get the debt ceiling raised, we will revisit 2008, 2000, literally great financial crisis lows, not lows, crisis. He didn't say the lows. So Besant is out trying to push, right, the legislators to push through the tax cuts and all of this fiscal deficit increase and spending that's going to go with it that the market is already pricing in. And they're also bludgeoning Powell to cut rates sooner rather than later, pointing to CPI coming back down. But might I just add, CPI coming back down is a little bit fishy, meaning this is a new methodology that they're using in order to estimate CPI. That's a new one on me. That was just shared with me today. So it's really tough to trade big picture in BLS, for example, unemployment and or jobless claims until they start to trend higher. Then it's very easy, because then recession risk is going to be pulled forward as jobless claims start to trend higher. And that's been my baseline bet. We're going to get and stay above 267,000 in about Q3 of 2025. Recession risk gets pulled forward. Only reason why recession risk got pulled forward in Q1 was because of Trump's tariffs, the way that they were rolled out. It was just like a hammer on your thumb, and markets freaked out and money went home. Also because of executive orders that Trump wants money to go, China in particular, investments to divest and go home. And then the threat of taxing foreign holdings, which is again more incentive not to hold US assets, and yields were rising abroad, and so they were chasing it. But then the market did a V shape, right? As soon as he said, we're going to delay tariffs, and then he got deemed the taco man, and the rest is history. But the point is, this is a bunch of stuff that I'm sizing up that says, all right, there's a lot of noise here, but the signal to me is pretty clear. I'm waiting for July, August. I have been talking about this for weeks and weeks. Market has moved higher into near all-time highs. Small caps went along for the ride to about 50%. We're still looking for the next shoe to drop. I am trying to stick to what I still have, which is even my most recent intermarket post, which is it was part 1, we're bouncing. Part 2, we're bouncing. Part 3, it just every single week I kept updating and going, we're still bouncing into resistance. I finally posted it today. We bounced into resistance. So now this is the time we need to take care for the next month, because it could still be 100, 200 points higher in that kind of melt up scenario, but it's going to be harder to do without really solid reasons. We've already risen on sentiment. Typically, we will start to fall on fundamentals, and I think the fundamentals will start to appear toward the end of the summer. And that's even separate from what's going on with the mini VIX spike at the end of the day. And also as a reminder, we have not had a down day. We've only had a single negative 1% day for the SPY in 7 weeks. So talk about mechanical buying. And then I have another chart, last one, which is, again, this is not a timing tool. I can do that in my trading room, but as it relates to big picture, when we're talking macro and setting up for when the next risk occurs where shorts want to get a little bit more prepared, this is put call ratio. And it basically, again, is just a reminder, right, that you've got some areas where, I'm not going to be able to highlight this, but this was July into November before the 2022 fall. And this was also back in the yen carry trade unwind. And this is now. So it's just getting to that point where we have a lot of scenarios right now pricing in a melt up with a Nomura saying, hey, we got vol control funds buying, we got buybacks, we got Fed, all gas, no brakes, et cetera, et cetera. But we really don't need much in bad news this summer to push it back over.
Join Samantha and Hans at the next Macro to Micro Options Power Hour, held each Wednesday at 4 p.m. Eastern Time. Registration is free. Scan this QR code or click on the link in the description. Watch the full Options Macro to Micro Power Hour episode by clicking on the video here, and subscribe to LaDucTrading YouTube channel for more content.